The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
I'm Basil Chapman, Tiger Technicians Hour on this 29th day of November. My pleasure to be here Monday through Friday at 11 o'clock until noon at 877-927-6648. Thank you to our wonderful hosts. Hopefully you'll stay tuned all day today. We go right through today being Tuesday. We will go from early in the morning, 7 o'clock with Nico and Paige, and we just continue all the way through to Andy Hart at 5 o'clock till 6. So Dow's up 17 at 90,115. S&P's up 4 at 2205. Excuse me. Comp index is up 19 at 5387. The VIX is down under the 13 level as a 1290, shows buying pressure. Most importantly, if you're looking at the E-mini here, it's up 375, doing nicely. The 120-minute chart made a low. Remember the peak D yesterday? Yes, on the 27th at 2211.75, had a down day yesterday. We were expecting peak C's in the Dow and the S&P. We got that. And what's really important about this is that we've made a trough D. I'm going to be teaching all about these Ds, how fantastically important it is if you're able to notate just the simplest technique of uppercase A, B, C, D, lowercase trough A, lowercase A, B, C, D, and then other things can happen at D. And it really makes a big difference. What I'm looking at here is the 120-minute chart, I think, has made a low. It could be the low before we go to leg D. There might have to be some retesting. It's at 2204.75. Maybe 2202, 2200 has to be retested. But I think we're on our way up, and now let me explain why I'm talking about it as being a big positive. We are long the Dow. And yesterday at the close, now this, of course, could be a very short-term thing. Yesterday at the close, we were fortunate enough to grab the IWM trading vehicle, the 300% long trading vehicle. And why? I'll explain it all as we go along. Look, in the Chapman wave methodology, there's a really simple technique. Basically, what I ask of the waveform is to be able to identify from the lowest, most obvious low bar, and you might have to do that a couple of times. It isn't always as obvious as just say, oh, there's a low bar. Sometimes you have to search for it. Most of the time, it's really obvious. So I say, in the beginning part, go to the most obvious low bar that you can, and merely start, and you're going to go to the left side enough to make sure that you've got the low, because sometimes you start the wave count and you say, oh, that wasn't the low. The low was 8 days ago. Now I've got to recount. So you really want to identify that. Now here's what's important. You identify that low bar, and then you start counting each successively higher peak. Peak A, B, the moment you cross B, that's usually a good sign that you should be going to from a buy signal to a buy mode to a D. I use other technicals as well a lot of the time. Don't always have to, but I can, and that helps as well. So the objective is get you from the beginning point to a D. Okay, now, what happens next is something that we will discuss as these things occur. What I'm looking at here is the Dow made a peak C at 90,152, had a down day. For my subscribers, just the myriad of charts I sent out showed that the 120-minute chart, I drawn in a little zigzag here, and we've got that zigzag, and that was a peak E, and now I think we're about to try, might not succeed, we're going to try to take out the 19,152 level. That's only another 40 points higher. 40 points high. Now, what's really important about this is that I've got a Chapman Wave 5 that was concluded. The last one just went sideways and then started a brand new move. I don't know if that's the case now, because the technicals there were really strong. So we'll just have to let that play out. Most importantly, the MACD is down a little bit. The stochastics under 80%. So the price is going to have to lift this up. So if you are looking at this and saying, okay, what happens if we go to a new high? A couple of things would have to happen above 19,152. I could call that F. I could call that brand new A. There are a bunch of things that are going on. So I'm not going to do that right now. I want to go through each chart and explain what I'm looking at. The reason why I'm still bullish is because in the Chapman Wave methodology, we want to get to the D. And from the 17,883 low of the 4th of November, we've gone to a peak C, and there should be a high above 19,152. It doesn't say how high. It just says there should be a high. And the weekly chart is still a question. Excuse me. I wonder why that sneeze just suddenly comes about. All right. What we're looking at here is in the Dow. The support is way down at 18,997 at the 9-period moving average. The MACD is still good, and stochastic is outstanding at 96.93, a tad lower than it had been the other day, up in the 98% level, but still fabulous. And that's going to help the weekly chart. And tomorrow we wrap up the month. So this monthly chart in the area of resistance, and in the monthly, but above the area of resistance in the weekly. Wow, the close is going to be really important. Let's look at the S&P, SPX.X. Same thing. Peak C at 2213.35 on the 25th. Pull back yesterday, peak B, and now we are trying to move up for a leg D. Now, there are a couple of things that I'm going to discuss with my subscribers for tomorrow, and that is what happens with the Chapman Wave squash if we get to a peak C and it's still very strong and we quickly get to a D. What happens after that? Does it kind of recycle? What's going on? We'll see. I also have to wait for the close today. Now, here is a little different. I've got E/A in the weekly chart. At this point, I've got to emphasize an E would be very negative if you start to pull back quite sharply. If you break 2170 support, that'll be a negative. I'll say, oh, that really looks like an E. But an A would be really positive. They're just mild pullbacks when we start to move to higher highs. The monthly chart is like the Dow is in leg C, and that they're in unison, and that's fantastic. Now let me quickly get to the other ones before we run out of time. The QQQ series lagging. QQQ series is lagging because it hasn't. 3 Qs, come on, there you are. It needs to still make a leg C, but it's underneath the 119.66 all-time recovery high, and the power shares of the QQQ Trust series. But if we do that by tomorrow, if we go over 119.66, that extends leg B. If we don't, but we do it next week, that starts leg C, and everything's in unison. You've got the Dow, the QQQ Index 100, and the S&P. Let's just quickly do this because we're about to go to a break. The gold is down 5 at 1188. It's the dollar. I'm still a bull on the dollar. I don't see any reason why the dollar should give up anything right now. It's given up some of the gains from early morning, but yes, this could be an alternation of a G, not a B at the top. But everything about it says there should be a B, and we should go to higher highs above 102.05. Doesn't say how high, but it just says over the coming 2 weeks, week and a half, I would say, the dollar should go higher. Crude oil right now is at it's down $1.74. It looks very poor. It sucked. Remember 44s to the 48s? And then we'll talk about bonds when we get back. Basil Chapman, Dow's at 15. We'll be right back straight off the messages. I never even got to the IWM, which I will do when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Gee, I don't know if I was doing it, of course, trading and all that, but I completely forgot if I did this during the show or not. Anyway, here's the S&P 5-minute cash. Made a low. Look at this beautiful arch formation. I'm going to be teaching that in my courses coming up. Oh, man. Look, I talk about these Ds. Look, there's a peak D, pulls back. There's a D. Well, it goes a little higher, but it does go to D, and it goes to an F and pulls back. Then it goes A, B, C, 1, C, 2, and it goes to a D. It pulls back very sharply to trough D, and then it goes A, B, and a C minus because it fails, and then it comes back down. But what does it do? It makes just a beautiful arch formation within an arch formation. And that's really what you want to be learning about these patterns, these 3 most important patterns in all of trading. Straight line up or down, arch or inverted V, or a cup or a V-shaped pattern. That's the core. Yeah, we've got the arch goes to the V-shaped pattern. Where did we stop? Right at that resistance. I never had time to draw it. I drew it in the E-mini. 2206.32 was at 15:15, 3:15 yesterday afternoon. Comes back down. And then what is it? 3:15 yesterday afternoon. And what's the high today? 2206.28. I mean, is that perfect? And look at the left side, right side price time match. These are just fantastic techniques, and they're so simple. I talk about the Chapman Wave methodology, but actually all you need to do is learn how to use these particular very simple tools to help you. I'm not saying this is the end all and be all. I make mistakes. It's like everybody makes mistakes, and sometimes the mistakes are just because the stop is too tight. I've done something that ameliorates some of the thinking, and in fact, you really do have to think this through. Sometimes you want to think of what can go wrong and what can go right. And in this particular instance, we got the V-shaped pattern, perfect V-shaped pattern, perfect in time. Look at that, from there to there. And these are techniques I'm going to teach. There's your plumb line, and boop, and now it's pulling back, and it's testing all the different moving averages. Let's see if 2204 holds. Okay. And now you've got the E-mini itself. If you're trading the E-mini right here, the 10-minute made that V-shaped pattern. This one I decided I would do something very different because the pattern was trading overnight. Therefore, it extended. And I've got the left side, right side price time match of 2206.00, round number high that was made at 440 on the 29th. That was this morning. Now I've got it going until 3 this afternoon to try to break that. Right here is where we should start to see some kind of support. Okay. All right. Levels to watch: 2202 to 2201 has to be key support. A break below says, it's just going to chop sideways for a little while before it tries to rally again. And a break above 2205.25 immediately starts to target those upside levels of 2206. Enough. Let's go. So IWM, the reason why we went long this morning, it might not work out. It doesn't matter. This is, you have to have a technique that allows you to at least attempt these things. Well, you made a peak F in the 120-minute chart on the IWM yesterday, the day before, and on Friday. And what happened was at 134.10, because yesterday we opened lower at 134 round number high, it suggested that there's a really good chance that we would make that peak B. In my work, I just showed you the chart. Let me show you again. There's a real good chance that after such fabulous technical tools here, the MACD is very strong, the stochastic still way in the 90% area, we should go to a C and a D. Once again, doesn't say how high, other techniques say how high. I'm actually going to put in here live, I'm going to put in some kind of an arch formation. Why? Because that's what my eye says should happen. And that's saying that somehow or other, we should make nominal new highs. And the real issue will be 134.10 was the high 3 days ago. And I'm suspecting that somewhere in the 135.50s, maybe a tad higher, that's where we start to see a lot of resistance. We'll see. Okay? So we are long, and so far we are up a little bit. Got nice, just a 1.1% risk. We've got a 1% risk for potential 3% gain. We'll see if it works out. Okay. Now, what's really important about it is that this has every look of leg A in the weekly chart of the IWM, Russell 2000. And this breakout in leg B in the monthly, he says 2017 should be really good because that's in 2017, not the whole year, but going into 2017. Why? Because it's a monthly chart. You need the whole month of December, starting from the Thursday, not to make a new recovery high, because if that happens, that extends leg B. So you've got the whole of December not to take out whatever the high is this month in November. And that's the way it works. Very simple technique. Okay, here we go. Questions. First question that came in was JP Morgan. JP Morgan. Yeah, this is what happens. I can call this, that's E. I can call this leg B, or I can make it more complicated. But FG, I'm going to call it an A to a B, and this is the Chapman wave inside rectangle formation, and that says put yourself a rectangle immediately when you get this flag pattern, and within the context of usually 120-minute chart, A, B, C, D, you've already done it. What you want to be looking at is the chance that within a smaller time frame, you're going to go to a peak D. Because if that happens, this gray inside buy mode, gray A, gray B, says that there's a chance, a good chance, in fact, that you're going to see higher prices going exactly to JP Morgan's high of the 14th of 80.44, a tad below or a tad higher, and then you've got to be careful because it comes back into the rectangle. But if it does that by going fractionally higher to 79.45 for leg C, pulls back and then goes fractionally higher to D, you're going to get yourself an inside buy signal that goes to a buy mode, and that'll negate that B if you get to a D and start to collapse. So I love this, but I do think that the bank index is getting a little frothy, and that within the context of slightly higher highs, you're going to probably see over the period of the December, slightly lower lows in some of the bank stocks as they consolidate fantastic gains. So that was JP Morgan. BKX, I'll do the BKX and then I'll move on to the next question. BKX isn't peak C, and we should go to a D, and that should be above 86.91, and it should be this week. That's the way I'm looking at it. Okay, a couple of things here. I'm going to just do this, if you don't mind. I haven't done my homework for it, so I don't like to do things without doing my homework. Have a little patience, that's all. So now we've got, the next question was BKX, and the BKX weekly has gone to a D. So far it's a peak D if it doesn't make a new high this entire week. But here again, I'm putting in the flag. I think I didn't just do this right. I've already done this. I put in the flag formation saying there's going to be some kind of a consolidation between the 86s and the 82s coming up in December. And that's going to lead us into January. So we've got our first, is that our second break coming up right now? And the Dow is up 17, S&P is up 3.68. I'll be right back. Basil Chapman, Tiger Technicians Hour. And stay tuned.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm just trying to find something that I was asked about. I didn't get it. Okay, so let me do this. I got TU. This is the 2-year U.S. Treasury note. And what we're looking at your ABC D in the 120-minute chart. It's made a peak, unusual peak G/C. I think it's a G in the monthly. and it's trading at 108 and 13 seconds, down a fraction. But what's really important is it's showing really little sign of trying to rally. It looks, in fact, if you don't mind, I'm going to do, because chart patterns are chart patterns, the TLT looks exactly the same. Stuck on that 9-period exponential moving average of 121.37. I think it's 37. That's where it's trading right now. So it was slightly higher than that at the 9-period moving average of 87. So what we're looking at here is that bond yields, and this is really the question is, what about bond yields? And let me just go to the TNX for 1 second. Yeah, and the bond yields is really important because this is the 10-year Treasury note interest rate. Look what's happened. It's broken the resistance in the monthly chart. There's another long-term channel that I've been drawing for ages. Look at that channel right there. Just wanted to show it. And think of the black line. This is the 9-period moving average. I made it very thick. And it's just above that. And it's going right into that resistance area. So this is going to be very important because if Treasury, 10-year Treasury note, which is really, that's interest rates for your major components like houses, etc. When we're looking at that, that's really that's what they look at. So that is showing you this is a single leg A. It's the strongest single leg A we've had for quite a while. We've done it before. We did in 2003 right there. Look, had a spectacular move to the upside. Then it went choppy sideways with a stair-step move. A stair-step move means it goes up 2 steps, pulls back 1, up 2, pulls back 1, up 2, pulls back 1. It just keeps doing that until it makes a double top. That's what it did right on that green dashed line, and it keeps coming down. So what we're looking at here is that rates are still within the context. Where will the rates be? And my suspicion is that we're getting better reports and that it's giving a base of support to the rates. And that's saying to me at 2.339, 2339 on the daily chart, the 10-year. I think it's kind of contained, at least for the next couple of weeks, between 2140s. Let's just make it wider, 21 and 25. That's where it's stuck. And stuck is fine if you're looking at rising interest rates telling us about the economy, that the economy is improving, etc. And I would think that it would take some really bad news for the Fed to even think of lowering it. They might do nothing, but to lower the rate, I'm not sure they're going to want to do it just yet. That's going to be the big thing. And that's why 2017, within my coda phase, I'm still thinking it through. Does the Trump win mean that we've now extended the bull market? I don't correlate this with the Reagan years very much at all. There's a huge difference. Just the results might be the same, but there's a huge difference. You remember in Reagan's term, you had the 1987 crash. So we'll see what happens. All right, now one of the things that I'm looking at is what happens within the context of these various markets when you've got the idiosyncrasy of the a leg B to a peak B in the IWM, and yet the New York Stock Exchange is already at a peak D. What happens? Well, the New York Stock Exchange has been the laggard. It is an aberration. It is not following through. Most importantly, what we're looking at is within the context of, thank you, in the den, peak D says, also, Basil, we are not $20 trillion in debt. When Reagan took office, not as much debt. We are not, So, the debt is huge. So we need to put this into context. And context says that the weekly charts, and I need to do this between weekly and monthly charts, I need to explain something. And this is something we're going to look at in my webinar series. The third one is where I put the package. I'll probably do it earlier than that, but where I really spend time putting the package together so that you can see how the daily leads to the weekly. The weekly and the monthly is still needs leg C, but it's way under the all-time high of 11,254 made in May in the New York Stock Exchange at peak D. So this is lagging, and that's going to be an indicator for us. But if you look at the IYT, look at this, the IYT, which is the transportation index, at a peak E, has this recycled? Is this a single leg D? I really think that standard procedure is going to come into place in a very short while, and that we will start to see that money flows from bonds to stocks over a period of time. And that could take 3 to 6 months. And then we've got to be really careful. That's the way I'm looking at it. All right. So what am I going to be teaching in my webinar series coming up? This is what I'm going to be teaching. I'm going to be teaching about how do we get these things? I mean, what's I keep messing around here. Wrong. This is the one I want. Front page of TFNN. Here we go. So we've got a Chapman Wave 3-session course, a simple technical tools to analyze charts, a 3-part course on the Chapman Wave methodology. I call it the Chapman Wave, of course, because it's under the umbrella with all the different techniques I've developed that are proprietary, and I've actually, there's only one that's proprietary, and those are the numbers I use on the short-term trading index. Almost everything else I've discussed. I've given courses. I'm really not afraid to do that. Just as far as I'm concerned, this is what we're here for. When I spoke to Tom O'Brien 13 years ago about coming on board, I said if it's an educational format, that's exactly what I love. I got my own independent trading and all that, but I love this, to be able to have a newsletter and to be able to discuss it and teach courses. So this is what we'll do. First session, what does the first session entail? It says, right in the first session, we're going to go through, whoops, that wasn't the one that I wanted. I should have had it right there. My wonderful engineer brought it up. There it is. Okay. So in the first session, I'll just start with the basics of labeling, just to show you how easy it is to label it, how you got to be careful not to make a mistake. That's your objective. And then I'll start showing you how we can include the MACD, the stochastic, the 9-period moving average, what they mean and how to use them. Gee, easy tools. Every software package has got that. They don't have the letters, but you'll type in the letters. You don't always have to have the letters, but it really does help. And then I give you examples, I give you questions, I test you, and then you can even send them to me and I'll check them out, etc. And that goes on. So that's December the 6th at 6 o'clock to 7:30. That's Tuesday, workshop 1. Workshop 2 on December the 20th, 6 to 7:30. I start going through studying the bear chart. We add the wave count. We add the technicals. We drawing the cup. We're drawing the arch. We're drawing channel lines as well as trend lines, and as well as the Chapman Wave inside track. And those are really important technical tools. And then, of course, give you questions and all that. And then the third one, January the 10th, 6 to 7:30, we go to the workshop on larger time frames, the relationship of larger time frames, peak F-tops, exercises, and what we've done so far. And you'll be getting my newsletter every day, so you'll be able to see these things unfold before your very eyes. Basil Chapman, Dow's up 27, S&P's up 6. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and we're looking at the Dow now up 38, S&P up 750. I think we're climbing on our way to leg D in the Dow, but it'll only be leg C in the IWM if it makes a new recovery high. We'll watch this very closely. Meantime, back at the ranch, while we're looking at a question about EM, the iShares Emerging Market in ETF, trading at 35.49, up 10 cents. Yeah, this is a very slow peak. ABC, 200 period moving average, just about a hit. It's at 35.49, 35.50s is the resistance area. 35.60 kind of breaks out. But if you've been short and you've covered your short, now you're long, which is really the question. I would actually start to nibble right here at 35.49. Now, one of the things that I've had to caution my subscribers to, we've got the most number of positions in ages, and usually that's getting real close to some kind of a reversal. And most of them are doing, we got stopped out of one for a small loss, but most of them are doing very nicely. And right at this particular point, what I am looking at is I want to start thinking of shorts. That's number one. Number two is I will be looking at gold and the TLT a little later on, because maybe that's what we see in a week's time when I start to get sell signals. But I don't want to even think along those lines yet until I'm satisfied that we've squeezed out whatever we could on the on this upside, if I'm correct. And what I'm looking at here is in the chart of the EEM, I've circled right here at 36, in the 36 area, 36 to 36.60. That's kind of the area where I'm expecting maybe that's where we see an arch formation, another one, that right shoulder failure, and then it starts to come back for a test. So yeah, if you're not long and you're not thinking about anything else, but maybe you're thinking that you want to short it, that was the question, I would wait until I get up into the high 35s and start to think about it. You could have 2 positions, one at 35.60, one at 36.30, with a real tight 36.55 stop. That's why I would look at it, because if it breaks into the 30s, high 36s, hey, it could go all the way back to the 200 period moving average of 37.70. So that's the way I'd be looking at it. But remind me again, at this point, I'm just giving out that information. Now, one of the things that I'm looking at your question about crude oil, I've said for a while, I think crude oil is just stuck between the 44s, maybe the 43s on the downside, and the 49s on the, I'd say 48.50s, but just make it the 200 period moving average of 49.06, and the 49s on the upside, just stuck between that range for now. I did say that if it closed under 42.50, there's a real good chance that crude oil is done and that it is going much lower into the end of the year, because that's just the way a chart pattern would be. So at this point, for a trade, yeah, you can have quick trades. I wouldn't get too excited about it. Okay, that was the last question is, I think I covered all those questions. Yeah. Okay. So now I can go into what I wanted to show you. When I'm talking about all these different tactical tools, let me just go back to my look at that. Look at that break to the upside. And I put the up arrow. You saw that up arrow. And if you were along, the speed with which we went through the left side, right side, remember the S&P cash? I said we got a slightly different chart pattern because the E-mini traded overnight. Now look what happened. You're in leg C. And there's that V. Remember, I spoke about that. I even drew the dashed line V shape. How are we going to get those trend lines? How am I going to be able to teach you how to put, look how simple the little dashed line is. I didn't continue it through. I meant to do that and I was busy talking and forgot. Look at that resistance there. Isn't that nice? Isn't that nice that if you were able to put in the Chapman wave inside track repellent propellant zone, you would have done this. You don't even have to be changing colors. The only reason why, in fact, most of the time, the reason why I have the letters is for subscribers and for my show. I mean, I'm doing this all the time. I can see I can tell this is a C. I don't have to type a C. It's just easier to read. So this is very important because it's saying that we've now gotten to the level in the S&P cash, which is right here. And in a quicker time, I have to now move it to another bar. I'll teach you which bars I like to use for the plumb line, and that's going to help you a lot. And now what we've done is we've identified one. If that doesn't work, I have to move it out, and that's it. And remember, it's the same as in the Chapman wave. The objective is to, as best as you can, to be correct on the last wave count. That's your only objective, and if you're able to do that, it says that you're giving yourself a really good opportunity to not only make some money, but to stay in the trade longer than you normally would. Isn't that what we all want? Don't we always grumble that we get out too soon? And that's the whole thing. Now, sometimes getting in is difficult. I had a tough time getting in to the long side of the Dow. Eventually, we did it, but it kept gapping up. It's very unusual for it to do that. It didn't have that kind of pullback that allows you a nice entry point. Hey, it happens once in a while. So here we are. This is the most conservative that I've done, and then I will have to extend it out. Actually, I should call it most aggressive. More conservative would say you've got until about 12.20 to get to the high of, in the S&P, of 2210.10. That's the cash index, remember? Okay, so now a couple of things I want to do. Within the context of markets, I wanted to show you something here. The RTH has had a very nice rally. It's just over a 50% rally from the 81.70 high to the 73s low. It's trading at 78, 77 right now, having made a peak D in the daily with just a modest pullback, and now it's rallying. Hasn't taken out yesterday's high of 78, 78 yesterday. It's parallel, just these 1 penny more. That'll be a very big plus because it's going into the gap. But look at the MACD. It's so strong. I'm going to teach you about the MACD, how you can use it. Look at the slow stochastic. I wouldn't have been shorting the market at all. Maybe very early because I'd said I expected for my subscribers. This is what I did for my subscribers today. Number one chart was, let me find them all. And I hate to do this but how else can I actually explain to you what I'm doing unless I show it to you? So here's the daily chart that goes out every single day, first thing in the morning, between 6 and 7. I start off with my charts. So that's the call for today from yesterday's close, a whole story and exactly what you must see. And it says, if the Dow, after early weakness, can hold the plus 30s by mid-morning, it should begin to slowly target the 19,150s by Wednesday or Thursday. We're already at 19,128. So there you are. And then I give you all the what are we looking at? The MACD, stochastic, etc. Then I look at the let me go to this, to the 120-minute chart. 120-minute chart, if I can find it right there. Okay, 120-minute chart shows you Chapman wave 5. It shows you peak E. I should have put a down arrow. I forgot to do that. But I explain exactly what I'm looking at. And support initially at 19,050. Let me see where the actual support was on the Dow. INDU 19,000 and 62. Okay. And then I explain exactly what we're looking at. And it's very important because that gives you the Dow analysis. Then I give the overview on what we're looking at. And I explain why we are looking at that and what the VIX is indicating, etc. I'll be back. Basil Chapman, Tiger Questions Hour. Dow's up 30, S&P's up 7. And we'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we are back, and the Dow's up 29, S&P's up 6.75. So this is my overview section. Comes out after the first two, the Dow 120-minute chart, and then I go to the overview. And the overview is usually the third one. Shows you my 5 quadrants. I love calling them 5 quadrants. This is the 120-minute Dow, peak D, there it is. This is the 120-minute VIX, peak C1, C2. Says it could pull back a little bit. And this is Richard Arm's Trin Index. I use it for specific reasons as a technical tool. And here's the daily bar chart, peak C in the Dow daily and the S&P. And then I discuss it. Look, I go all the way through. All the IYT made a transportation average, made a peak D, all-time high. The New York Stock Exchange made a daily peak D, way under its all-time highs. However, the IWM was only at peak B. The XLK high-tech ETF soared in leg B with IBM leading. And I give you people don't always have time for this stuff, but I do it for those who do have time. So then I also say, at the end, I always say today, while there could, in this particular instance, say, while there could be a tentative first few hours, a Dow plus 30s, SPX plus 5s, CompX plus 12s would start the healing process for a stronger close as the VIX subsides. And then I go through all the different charts. On the weekends, I usually start off on Saturday morning giving the Dow, the overview, daily, weekly, monthly, etc. And plus all the charts that I think are pertinent. During the week, I give the ones that we're going to trade or we're just about to enter. Let me just show you this here. Which one is this? IBB is struggling. I showed a chart on that. It's really struggling. I showed a chart on the IWM and a whole story on what's involved and why. We grabbed it at the close yesterday, just off the exact low, and now it's trading a little higher than where we got it. But this bar says, you know what? Don't get too anxious. We might have to take a 1% loss. I'm not sure, but this is a good opportunity. I might come back in if it tests the 9-period moving average. It'll be fantastic if there's an inside bar today, a higher low and a lower high, or something close to that. Maybe a low that comes nicely off the bottom. And then tomorrow is a good day, not a weekday, but a strong day. Doesn't have to make a new high. That'll be encouraging. But I discussed these four, the daily, the weekly, the monthly, and right here's the 120-minute chart, having made a peak F top. These are things this is the IWM. So this is what I do for my subscribers. So before we're about to wrap up for the day, I'll be back a little later on to be interviewed by Tom. But I just wanted to say there are a couple of things going on. The reason why I wanted to have this webinar series is because these are the techniques I use all the time. My subscribers, there are a lot of people that use them, but a lot of people have used them and they've kind of forgotten the CD, all the information that's on my CD, the 460 pages or something. So I'm going to be doing the review so that it's really clear. I'm going to explain what we're looking at and why we're looking at it. So it's going to be like a mini series that if you do, even if you've never done technical analysis, at least you'll get some core ideas that you can take a chart and let me do this. Let me just grab I don't even know what it is, but let me make it something different. Let's go RTH. This is let's go to Google. I just want something with a lot of volume. And you can start counting from the low. You go A, B, you're expecting a C, but there's a restart. So it's A, B, C, D. Wait a minute, there's a single leg, there's EF. So it goes to an F, but it got you to the D. And now it has another big spike to the upside, and it's pulled back, and you start counting A, B, C. Well, what am I going to do? I'm going to grab a circle or a V right away and say, hey, there's a good chance that Google, I like to call it Google, even though it's called Alphabet, is going to try to retest that high. And then I'll explain the Chapman wave cup and ladle technique, which most people don't know about. What's the implication? How positive it is? What if it's a cup and handle? Not so positive, etc. So those are things I'll be doing. So think about it. I believe you get my subscription for 5 weeks. I mean, it's almost like you're getting it for very little money. So please consider it. I love teaching it, and I'm looking forward to it. Hey, have a great day. And otherwise, I'll see you tomorrow if I don't see you with Tom later on. Dow's up 32. Have a great day. Stay tuned for your swimming lesson and all the other great shows.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.